Hey everyone, I'm your host Tom Shaughnessy, and welcome back to Chain Reaction, a research-driven podcast that's a part of Delphi Digital. If you're not on Delphi's research portal, you're missing out on the critical analysis read by the top minds in the crypto space, so be sure to check it out. One quick housekeeping item: nothing said on this podcast is a solicitation to buy or sell any security or token, or to make any financial decisions. I may personally hold tokens mentioned on the podcast, and you can view our show notes below for our complete disclosures. With that, let's jump into the episode. Hey everyone, welcome back to the podcast. Today, I'm thrilled to have on an old friend and a legendary microcap investor, Ian Cassel. Ian, how's it going?
It's going great, Tom. I appreciate you inviting me on the program.
Yeah, it's been quite a while. I'm trying to think about when we first met. I want to say 7-8 years ago. I'm not sure.
I think that's pretty accurate. I know you were in college or even before college, maybe. It was a long time ago.
Yeah, geez, I think I came across MicroCapClub in high school, and I was just blown away by like the level of depth. And I was like, I got to get on here, and I got to meet the guy running this.
Yeah, no, that's the cool thing about MicroCapClub too, is we get people in there that are not only maybe established fund managers, but also, retail and even, younger retail investors too. I mean, what I found is, and it might be the same in your universe now, is, a lot of the ideas and a lot of these ideas are found by young, gritty investors. And so we definitely want those folks, just like you were and still are. You're still very young compared to me, especially, on MicroCapClub. So
it was daunting trying to get on there, and I'm glad I was able to be a part of what you built for a little while. And Ian, just I know you very well, but just for people who aren't aware of who you are, can you give the quick 60 seconds who you are and what MicroCapClub is?
Sure, yeah. I'm a full-time private microcap investor, and really, well, maybe I shouldn't say I'm a private microcap investor right now. I've just in the last year or two, I've actually taken on some investors, some outside investors to kind of invest alongside me in the ideas of my own capital. But really, from a relatively young age, call it sophomore in college, set out for a goal to be kind of financially independent and be a full-time private investor. And lucky enough, and a little bit of skill involved and a little bit of luck. But by the time of 2008, actually right in the middle of the economic crisis, pulled the trigger, cut the safety net of income, and just made a go at it as a full-time private microcap investor. And so 2-3 years after that, I've always wanted to create a community for microcap investors, people that are experienced in this space. I've always been interested in what other experienced investors are looking at, what ideas they're looking at, and why. And wanted to have that conversation kind of in a private forum, so people would feel safer to talk about the ideas and what they liked. And so launched MicroCapClub in 2011. And the first couple of years of that, it was just honestly me talking to myself. And I figured worst case scenario is nobody would join this forum, and it would just be my personal diary for me to look back on and see all the mistakes I've made, quite honestly. But luckily attracted some good investors over the years. And, after 5-6 years of that, really it was at a spot to where it was really a great tool for not only my personal investing as an idea generator. I wanted to see more ideas, but also a networking tool and a bunch of other things. And today, we have about 200 members from across the world that are part of MicroCapClub. And then we have a few hundred subscribers, people that if they don't have the time or ability to apply to get into MicroCapClub as a member, which is free, you can just simply, basically for $500 a year, you get view-only access of their forum.
Yeah, that's you're humble, so I'll say it. I mean, these are 200 of the top people in the world. The quality is just unmatched for your platform, which I love. I mean, did you think early on, when you're thinking about those two-sided platform economics or just two-sided marketplaces, how did you attract those early kind of authors or members to the platform? Because it seems kind of hard to literally build a platform from scratch.
It's extremely and excruciatingly hard, especially when it's a private forum. It's one thing if it was public, and you would attract just the public eye and public attention, and anybody could join. I have no doubt that if MicroCap Club was public, we'd have 50,000 people in there and this, that, and the other thing. But people wouldn't really have the comfort level, and quite honestly, then you're just like any other public forum in a lot of ways, where a lot of the bad actors or just novices kind of clog up the threads where it's really hard to find the value add. And so from kind of early on, I really wanted to keep it focused on experienced microcap investors. They would be the only ones that would be allowed to post and provide content. And luckily, by the time I launched, I had a network of maybe 20 or 30 investors that I knew up to that point, that I knew would probably want to be a part of the community. And when it launched, just like everything, when you launch, your friends, your family, they all tell you, great idea, yeah, go for it. And then when you launch, it's like crickets. And that's what I found actually with a lot of the folks that I knew back then that said they would join and participate, is not that many people were active, because people were pulled in different directions. And what I found was I really had to start from scratch to grow that. And that's really where social media, Twitter, and just continuing to have conversations with folks. And it was just a grind, pulling people into Microcap Club. But that's always been sort of our approach, at least from the Microcap Club standpoint. We don't do a lot of push marketing. It's more like pull marketing, through our blog posts, through social media. Attracting the right type of people into your brand is important if you want to sustain a long-term one.
Yeah, I'm with you there. Do you think that the level of candidness or the level of depth is better since Microcap Club is not public? Like, how do you think through, your option to keep it more closed doors?
Yes, I think there is a certain degree of comfort in the fact that it's a private forum. But at the same time, I try to let people know that just because it's private doesn't mean you should be, sharing things that you shouldn't be sharing. These are public equities. There's rules about what should be discussed, what can be discussed, types of information, and we're really, we're critical and cautious on that as well, just to make sure that this isn't just people can just come on here and spout whatever they want to do, and we're trying to keep it cordial, as well. We tried to make sure that it's a positive place. It's not just a bunch of people coming on and bashing a company as well. So we try to keep it more of a positive place of finding ideas. It's not a place to come on and try to find, create a thread on why you should short company XYZ.
Yeah, no, that's annoying. And I mean, the entry is unique. I haven't seen your model anywhere else, like where you can either submit a thesis and potentially get approved or pay to join. What's the approval rating on people submitting a stock pitch to get approved on Microcap Club for membership?
Sure. So, I mean, to become a member on MicroCap Club, you have to submit a 2-3 page investment thesis on your favorite microcap stock. And then at the end of every month, we vote on all the applications that have been aggregated during the previous month. And our membership reads them and votes yes or no on the quality level of that thesis. And normally, in any given month, we usually have 10 to 15 applications per month. And I would say on average, maybe 2 to 4 get in every month, somewhere around there. And so, it's probably around, 20% of applications end up becoming members, but you can always apply again, down the road. So, and what we find that a lot of our subscribers that subscribe, they pay $500 just to get view-only access of the forum. They ultimately, many of them just end up becoming members once they have a better idea and become better investors themselves, and have the ability to actually apply and formulate a thesis on a microcap.
No, that's huge. And I mean, the results on the forum are like really solid. I mean, what are the top picks you've seen over the last couple years? And I don't want to say that this happens every time, because obviously there's risks involved. But I mean, some of the companies your community has uncovered are pretty wild. I mean, like Straight Path Communications, a lot of normal or traditional large cap investors are aware of that, given Verizon. And then there's Expel and Kuro Medical System, stuff like that. But what stands out to you?
Yeah, I mean, the other difficult thing when you look at what we do is we're not people. Well, I think when people come to subscribe to MicroCapClub, I think some people figure that they're going to come on and we're just kind of similar to a guru service where we're going to give you our top 5 picks, go out and buy them. We'll keep you updated on why you own them, that type of thing. And that's not what we're about. Really, when somebody's subscribing to MicroCapClub, they're getting access to 200 people that are experienced talking about different types of companies. There's 600 companies now profiled on MicroCapClub, to give you a round number to it. And so over the years, out of those 600 companies that have been profiled, there's winners and there's losers. And probably over time, it would be pretty close to what you think. Probably about half of the companies that have been profiled are up, and half of them are down. And just kind of like when venture capital, there's definitely a power law to investing in these microcap companies. Meaning that if you invest in 10 of them, you might have half of them that go down. You might have another quarter that go up, and then you have 2 or 3 out of the 10 that become multi-baggers, hopefully, for you. And so it's kind of a similar type of performance that we see overall. And I believe last time I checked, of those 600 companies that have been profiled, I think it was around 100 or so have doubled or more, and maybe 50 have, quadrupled or more. You can see the performance. Actually, we have our top performers on microcapclub.com so people can see it. But there's definitely been a lot of multi-baggers that have been talked about on Microcap Club, and that's what we're about. It's not a guru service. It's not about here's a bunch of 10 picks, go buy them. It's here's some conversations. People are attracted to different types of situations, and it's up to you to kind of formulate if you want to be active in the stock or not.
Yeah, no, I like that you guys are a community of sharing like a thesis, and there's intelligent conversation back and forth instead of a guru service. That's why I love kind of what you've built there. And I guess the other point there is that you guys, I mean, you're coming up on your 10-year anniversary here, right? I mean, I guess the other question for you is, I mean, did you expect to hit this level of kind of community engagement by now? Or I mean, it's awesome that you guys have grown to the level that you're at.
Well, it's funny you hit on your question there about engagement. When we first launched the club in 2011, we didn't really prune back our members. So there's people that get in through applying and are there for free, but they prove that they are a member. What happened was we quickly got up to 3, 4, 500 members, very quickly. And what I found was the engagement, though, was low as a percentage of the overall numbers. And then I realized, it's pointless to have 1,000 people in here if only 50 of them are actually using it. I'd rather have a small kind of intimate group that are actually using, Microcap Club. And so I think it was 2014 or so, decide to kind of have rules set where if you're a member, and it doesn't cost you anything to be a member, you have to be active. And if you're not active, you're going to be cut and pruned out. And so we started pruning back the tree. And what we found was the engagement levels just continued to increase and increase and increase. And, today, we have 200 members and there's probably 150 of them are on there every day.
That's insane.
And that's the type of engagement. I'd rather have that than being able to, showcase, oh, we have 10,000 members, but only, 30 people are on there. I'd rather have a small, intimate group that we have. So it's turned out really well, but it's taken a long time. There was no quick fix to it. It just took time.
Yeah, no, I mean, that makes a lot of sense. I mean, a lot of crypto happens on Telegram group chats and Twitter. And I know that sounds weird to traditional investors, but the best groups that I'm in have literally sub 200 members or less. So it makes a lot of sense. And the other point for you is, I mean, you said you had 500 or 600 companies profiled, and these are, in-depth kind of, or not in-depth, but, like high quality coverage of these companies first. Doesn't it get really hard for somebody new to come in and find a new company? Like it's got to get hard over time, right?
It is. It's one of the things that we think about quite a bit is, if you're new to this and you're kind of just tossed into the forum, it can be somewhat overwhelming, because of the amount of conversations that are happening, the amount of companies that are now on there. And there's a few ways or tools we've tried to make it easier for people to find things. Like, for example, the companies themselves are broken down by sector, and so you can just go and look at the technology sector. And if you're not interested in basic materials, which is kind of mining, oil and gas, you don't have to follow that one. And you can follow these industries, and you can be alerted every time there's a post on that industry. And then when you drill down into a company or two or 10 that you like, that you want to follow, you can follow those company threads and be alerted in real time when there's a post on there by anyone. And also, what we've found to kind of sort through that clutter is every single member that is on the club, which means that they've profiled a company, at least one, if not more. We actually track their performance as a member. So if you're on there and you profiled company XYZ at $1 per share the day you profiled it, we record that, and then we track that company's progress, and we actually rank our members based on the aggregate gains or losses of what they've profiled in the club. And so you can kind of go on there and view our member ranking, and I believe Maj is number 1 right now. And so his member ranking is 4,041. So what that tells you, that ranking, is that every single company, both the good and the bad, if you added up all the performance since they were profiled by Maj, would equate to he's profiled 4,041 percentage points of gains since he's been a member.
Wow. Yeah,
And
I love Maj. He's something else.
yeah, and so Connor Haley, 3,700, Paul Andreula, 3,600. I'm up there for some reason. So, but it's a good way. It's a good, simple metric. I mean, it's not perfect, but it's a very simple way. If you profile 2 companies and your first one went up 200%, your next one went down 50%, your ranking would be 150. So the negative ones work against you.
That's interesting. And when people are giving these pitches on MicroCapClub, I mean, I was on MicroCapClub and then I had a stint in equity research, so that, very different kind of initiation posts, if you will. How do you, for those unaware, how do you encompass an entire thesis in 3 pages? Or is that the point?
That's sort of the point. What I find is it's sometimes, not sometimes, what I find is it's almost easier to write call it 20-page investment thesis than it is to write a 2 or 3-page investment thesis really well. And so when you go into our application section of the website, it lays out sort of guidelines of what we're looking for, like a company description, define the market opportunity, the share structure of the company, the competition, the management, financials, financing risk, catalysts, what do you see? If you talk to the company, what do you learn? Current valuation, your future expectations, and maybe even a price target and the supporting logic, for that price target. And so, kind of hitting on those things, I think it's sounds easy to do a 2-page investment thesis, but it's hard to actually boil it down into 2 pages, hit all those things, and do it in a coherent and intelligent way. So, I think it's harder to almost write a 2-page really good investment thesis than it is to write a 20-page one.
No, I'm with you there. And not to detract from microcaps to crypto, but just because it's kind of interesting. I mean, a lot of crypto is sub 50 or sub $100 million tokens that most are a joke, right? But some actually make sense. And a lot of it comes down to, having a quick thesis, because it's very hard to model, or if not impossible. So a lot of these things do come down to kind of just having more of a high level thesis of why a project or platform works, why the team is solid, and why the token, or in your case, the equity, would accrue value. So it definitely makes a lot of sense. And Ian, switching over to, so you have MicroCapClub. It's been over a decade, and incredible stuff. Let's talk about you as an investor. What do you invest in the space from a sector perspective or a theme perspective today, and how has that changed over the years?
Sure. So if you and your listeners want to think about the public market ecosystem, so public stocks, in North America, there's approximately 20,000 publicly traded companies in the US and Canada. What a lot of people don't realize is about half of those companies are actually microcap companies. So that's defined as having a market capitalization less than 300 million. So there's around 10,000 of them. And what happens is the smaller, if you're just looking at those 10,000 microcap companies, is the smaller you go, the more inefficient the prices are, because it's hard for larger, I won't go say smarter, but larger institutional capital to participate in a very small microcap company, because it doesn't have the liquidity for it to be worth their while. It's hard for a $500 million fund or $1 billion or $10 billion, to worry about what a $50 million market cap microcap is doing when it trades $20,000 of stock a day. It's kind of pointless to them. And so what happens is, even sub 100 million market cap, so the lower third of the microcap ecosystem, there's still, 6,000-7,000 companies. That's more companies that are on the Nasdaq and New York Stock Exchange combined. So you still have a lot of companies that are small that the institutions can't own until their stocks go up and become more liquid. So there's a structural advantage for small, astute capital to be investing in small public companies, because the larger, smarter guys can't buy them until their management teams perform, stocks go up, and their stocks becomes more liquid. And there's historical research been done on that. If you look at the CSRB data of all public companies, the best performing decile of the public markets is the smallest decile of the public markets since 1926. And it's like a huge difference between the smallest decile and the next best one. If you look at some white papers done by Roger Ibbotson, who's a Yale finance professor, also manages an asset management firm, he's done a lot of research on illiquidity. And what he found was the best place to invest since 1971 is in illiquid microcap companies. And so there's a lot of, research being done in this space that proves kind of what I'm saying. It's just not me up here touting myself or the club or whatever. There's history, on our side as well. And yet, there's a lot of negativity around what we do too, as you well know, Tom. Referring to what I do is kind of penny stock investing or things like that. So when you look at the ecosystem, what I invest in, I'm really trying to find the smallest, least liquid, least institutionally owned, best businesses I can find that are run and managed by great leaders. And that's a mouthful of a sentence with too many commas. But that is, in general, what I'm looking for. And, it's what I've been doing. I would say that one sentence of what I do is what I've been doing, pretty consistently for, call it 7-8 years. When I started out as a microcap investor in the early 2000s, I would characterize my type of investing as story stock investing. So trying to find momentum, trying to find a stock that has a great story with it. And, I really didn't, quite honestly, look at financials too much. And I did decently well in there. I mean, it helped build up my capital base over those years, but then I ended up pivoting kind of more from that into more mining, precious metals, into biotech, actually from there. And then from there, I moved more into the kind of traditional compounder, high growth, profitable companies, GARP type companies, in the late 2000s into 2010 type time period. But it's a little bit of a non-traditional path, just because unlike a lot of people that started reading Warren Buffett when they were 2 years old, I really didn't even read a Berkshire Hathaway annual letter until I was already a full-time private microcap investor. And I don't say that to have a chip on my shoulder. I just say that to mean that there's a lot of ways that you can kind of reach your potential as an investor, and it doesn't have to be a traditional path.
Yeah, that's an incredible journey, and there's a lot to unpack there. I want to ask one kind of devil's advocate question, especially because I was also in the space and I still invest in, sub $300 million market cap tokens, today. So it's kind of a similar structure. How do you think through that negative connotation that the space gets? Like, I mean, there's clearly research that you've shared, but when people think of, investing in a $20 million stock, they're like, oh, it's a joke, it'll never grow. But meanwhile, you're here investing in, owning potentially a few percent of a company, you're following leadership, it's a multi-year investment. How often do these companies, these microcaps, attract institutional investment? Like, how often does that illiquidity become liquidity and there's the potential to exit at large valuations? Because I want to kind of paint the picture here that, this is a reality because you're clearly doing it.
Yeah, I mean, it's hard. It is hard. I mean, it probably one of the areas that my investing changed the most from even in my earlier years was, in my earlier years, I would take a big position all at once into one of these companies. And I probably got lucky, to be honest with you, early on, where, a few of the things I bought big worked, and that works until it doesn't. And what happened over time is you have enough experience with enough companies where you realize, these are small, companies, and you're buying these things not because you think you can make 20% over the next couple of years. You're buying these things because you think you can make multiples on your money over, a 3, 5, 10-year period of time. And there's no reason to jump in with both feet with sometimes unproven leaders of companies and even business models. And so what I do today is I take a little bit of a smaller position up front. That doesn't replace any lack of due diligence. I'm still doing hours and days worth of due diligence before I even buy a little bit of a company. But what I've found over the years is it is definitely worth just buying a company and waiting to see management execute. And if they execute, buying a little bit more. And it's okay to buy a stock higher because it's hard to find management teams that execute. And the ones that do, they ultimately end up, being some, big winners in this space. But one of the worst things you can do is actually just take a pure buy and hold mentality to microcap investing. These are small, just like private equity, just like venture capital. These are small, emerging companies. It's kind of like if you have a 2-year-old or 3-year-old in the house, you can't just leave them at home by themselves. You got to watch them, and that's how these businesses are too. And you got to watch them. And some of my biggest mistakes were when I took the eye off the ball. And what I mean by that is continuously to track the progress of that company. You know, be understanding what the thesis is and what could destroy that thesis. Some outside factors or what have you. And so it's important to, at least for me, to buy a smaller position, be okay with averaging up in it once you see execution. And the best advice I can give to new people actually in microcap that want to get involved in microcap is, this might sound boring to some people maybe listening to this, is focus on the profitable companies. When you look at 10,000 microcap companies that exist in North America, I think 15% are profitable. And you cut out probably 90% of the issues if you just find a business that's profitable. And you can still make a lot of money if you find a business that's profitable that you think can continuously grow double digits over the long term.
There's so many things that are solved by profitability because they clearly have
Yes.
their market and their business figured out.
Yeah. I mean, I tend to, kind of what I normally do with my investing is I'm trying to find the companies at that inflection point of profitability. And but there's also risk in doing so. My portfolio probably has 40-50% turnover in a given year, and maybe half that turnover is because an investment thesis didn't play out or wasn't playing out the way I thought it should. Maybe the other half is because I find something better than my 12th best idea. But there's going to be turnover in a portfolio of microcaps. Not everything deserves to be bought and held and forgotten. There's no such thing as a coffee can portfolio in microcap, or else you'd be broke.
So, Ian, one of your, I guess, now famous lines, at least in my opinion, and it's gotten around here, is that you like to do the bulk of your due diligence on what you already own versus what you don't own. And while it sounds obvious, when you say it out loud, I feel like a lot of people are always looking for the next idea and not actually spending time, revamping what they currently own. I mean, I know VCs and funds have quarterly check-ins and they're in constant contact with teams, but individual investors, I feel like, might go on vacation mentally with something and kind of hope returns are there. How do you kind of think through, your thought process there?
The overall, what I believe is what you don't own can't hurt you. And so I want to focus on what can hurt me first. And that's what I own. And, I'm still, a full-time investor today, not because of the gains I've had, but it's because of my ability to escape the large losses. And a lot of that is due to just knowing what I own better than most other investors that are in that company, and being able to spot the signs of that investment thesis cracking and selling before other people do. And that's just a hard nosed fact of it.
No,
So
no, it's fair. I mean, it's easy to say though, but how do you disconnect yourself emotionally for, I mean, these aren't, you're not out here buying Verizon, right? You're out here spending a year or two investing, you're meeting the team, you get to know their, potentially their family, what they're interested in. Like you have a really solid relationship and then you have to go and cut it. How do
hmm
you emotionally deal with that?
it's hard. It's hard at first, and I think that's why it's hard to do that in the beginning. But when you're a full time investor, and you are supporting yourself, supporting your your wife, your family, or whoever it is, they're number one. And every time but the biggest losses I've took in most things are things that I shouldn't have because I spot the signs and I just decided to hold off from selling. And but it is difficult because it feels very transactional. And you're right. Tend to get to know the CEOs fairly well. It just happened to me in the last 6 months where it's a company I owned for 3 years. And the stock all of a sudden did really, really well, and I think outstripped sort of the potential over the next 5 years, and I had to sell it. And it was kind of weird going back to the CEO and just saying, "Hey, I'm sorry, I'm out." He was, he understood, but it still definitely has that transactional feel, which kind of sucks, to be honest with you. But you get used to it. It's like it's okay to marry these things, but you do have to be prepared to divorce quickly, or else you're going to take your losses.
Yeah, no, you see a lot of. I mean, I see it in the new space now. There's just a lot of cult following, a lot of people getting married. I mean, I guess because that's more retail, but I think that's what separates the real kind of legendary investors from everybody else. It's not their winners, but their ability to kind of cut losses.
And when you own something, especially if you have a platform like you do, Tom, or other people, in stocks or microcaps too, the more you talk about something publicly, the harder it is to turn on that thing when you should, because you've already kind of stamped your name to it.
Yeah,
And so my best advice to people is like, just don't talk openly. Don't talk openly about what you own unless you have the willpower to kind of turn your back to what you just said and do the right thing and sell. And unless you can do that, and cut out the emotion of it, don't be talking about what you own publicly.
yeah, no, that's totally fair. I definitely agree there. And getting on that tangent of exiting an investment, there's obviously a lot that goes into your due diligence process. I'd love to kind of talk through, I guess, certain aspects here. I guess on the management side of things, a big part of your investing is betting on the horse. What turns you off, I guess, initially from an investment based on the management team? And then I guess if you're in something and you exit because of the management team, like two different times, what turns you off and leads you to sell based on the management team?
Usually it comes back to execution, just the lack of execution. And when you start making excuses for the management teams that you own, when it's quarter after quarter of them saying that they would do things and they just don't do them. I think that's number one. Actually, I don't know if we hit on this earlier in the interview, but I ended up writing a couple books. First one was called Intelligent Fanatics Project with another Microcap Club member, Shaughnessy. And the reason why we wrote this book was I was really interested in fine tuning my qualitative lens for finding great leaders of these companies. And intelligent fanatics is a term that Charlie Munger used in one of his speeches, and he talks about several intelligent fanatics in his speeches, and some of them are known, like a Herb Kelleher of Southwest Airlines, and then some of them are less known, like a Les Schwab, who founded a private company. And so what we wanted to do is kind of look at those entrepreneurs that started companies, built them up, sustained their dominance. They oftentimes dominated their niche, geography, or industry for decades. Like, how did they dominate an area for decades? I mean, that sounds incredible. And so what Sean and I did was we kind of researched these intelligent fanatics, wrote their stories, wrote about how they built their businesses, and pulled out valuable lessons. And really, it was a fun book. I think it's a book for entrepreneurs as much as it is investors. But it really kind of gave me a clearer lens into trying to find these great leaders early in these small companies, because the smaller the company, the more important management becomes. And if you want to find great companies, you got to find great leaders. And so, I just thought I'd give you that little side story before we get into this subject.
Yeah, no,
So
but Ian, back on, I mean, just not to interrupt you, but on that point, I mean, the book, I read it, I loved it. For those who don't know, I mean, what are some of the most interesting things that you found on the qualitative basis? I mean, you talked about being able to dominate an industry
mhm.
for decades, but I mean, I guess what people in your space are looking for are signs of those aspects before they're reflected in the market or over a career, right?
Mhm. Yeah, and a lot of the aspects of intelligent fanatics that we found is you can't find these unless you're willing to do the work and do that qualitative due diligence. And so, really, when you look at a company that has something special, they have employees that love them, love the management team, love the company, and they have customers that love the product or service. And that's what I'm trying to find first and foremost in the companies I'm trying to find is, an employee base that has a great culture, that loves to work there, where they're not willing to, move across the street for $1 an hour more, that are really there and are internally motivated. Finding those great cultures, you have to talk to employees. So you have to be willing to do that as an investor. And the second part of that is just trying to find, customers that love the product or service that company is selling. And that, again, takes some on the ground due diligence, talking to customers, even talking to suppliers. And that just takes time and work. All of this stuff, finding a great company is 95% what I just described. And yet 95% of investors don't do those things. And so to have above average returns, you got to do what other people aren't willing to do.
Yeah, that's how hard is it though to do that? I mean, like, are the CEOs here giving you access to the suppliers and the employees and the products, or is this you, throwing on your cape and going out at night and kind of talking to these people? Like, how exactly is it from the investing point of view?
It's a little bit more of the latter, kind of throwing on the cape. And, because honestly, if you're asking the CEO to make introductions for you, obviously he's going to introduce you to people that like him.
That's fair.
So a lot of it's kind of sleuthing, which is another great book, by the way, The Sleuth Investor. So a lot of it is you're actually trying not to get their introductions to people. You're trying to do it on your own.
That's totally fair. And then I guess just going back to our earlier point on why you would exit based on the management team, you pointed to execution. Is there anything else you would think about? Like, I know, some of the things I ran across when I was on MicroCapClub is some of the CEOs I didn't personally like, but they were still successful, and I had a hard time kind of bridging that.
Yeah, no, it is. That's why it always comes back to execution, because you can find people with different type of character traits, and some of them are likable, some of them are not likable. Some of them are good salesmen, and some of them you feel couldn't sell water in a desert. Um, and it just comes back to execution. Probably one of the biggest things, actually, ironically, out of the book that I've done a lot more over the last few years is when you're evaluating a CEO, is actually not to talk to the CEO as much, is actually to talk to the people that are around him or her. Talk to the presidents or vice presidents around them if you can, and get a clear picture of what they think of the leader and also the company themselves. And you'd be amazed by how honest how honest some of the answers are that you'll get. I mean, when I first tell you this, you think, oh yeah, I'm sure they're going to say everything's great. But it's funny how all of a sudden you get somebody on an off day and they tell you, the real story. so it's worthwhile doing.
Yeah, no, that's fair. And also, I mean, the companies you're addressing, I mean, it's not really like, you got to go through 20, legal teams to talk to these guys. Like, they'll give you more candid answers because they're smaller kind of startups.
Yes. Yeah, exactly. I mean, a lot of them, I would say, and what I get asked that question quite a bit, like, how do you approach a management team? And I always say, well, how do you literally approach them is, through their website, through their investor relations contact or whatever. But, what I always say, when you do approach them, always make sure you're over prepared, because I think whether you're investing $5,000 into a stock or $5 million into a stock, they just like to know that you did the work, and they'll respect you if you did the work. And, you do that by not going into the conversation asking them what they do. And so, really simple questions. You do it by doing a lot of that work up front, so you know the right questions to ask.
No, that's totally fair. And I guess just more operationally, do you take positions privately, or do you go out in the open market? How do you approach the investment side once you're kind of convinced and you want to allocate your first, say, third?
It's usually in the open market. I mean, a lot of what I'm trying to find are companies that don't need capital. So that means I'm not really participating in a fundraise or equity offering. I'm really trying to find what I'm trying to find is a kind of visual. If you want to visualize it, I want to find lightning in a bottle. I want to find a company that's growing 30-40% a year, that has really, really good margins, that has really great operating margins, that maybe have just eclipsed to profitability, or maybe they are profitable already, or you think they will be in the next 6 months and they have the balance sheet to get them there. But what you find in this space is the companies that have the biggest moves, and I'm talking about sustained moves, not ones that flash in the pan, went up 5x and then went straight back down. But the ones that can sustain a big move and become a small cap company are the ones that drive earnings per share, and they drive it quickly. And so if you can find a small company that's growing double digits, that's profitable, you know, if you can find something that can get to $1 per share in earnings really quickly, those are the ones that can just make really epic moves and can stay high as well.
No, that's fair. And do you invest around the world, or are you focused on investments in, say, the U.S. and Canada, kind of around here?
I'm in the U.S., Canada, the UK, and Australia.
Damn, Australia. That sounds interesting. I'm tempted to ask what the company is. But we don't have to get into it.
No, I mean, I just recently, so I was normally, that's another thing that's kind of evolved in microcap, is it's becoming more and more important for microcap investors to not be restricted by borders, and so Canada kind of first started opening up to US investors. I mean, it was always open, but I found that very few people were investing in Canadian microcaps back in 2012. Well, that's changed now. Now you're probably having just as many people investing in Canadian microcaps as are down here in the US. And then going across the pond to the UK, I mean, there's 1,000 companies on their London AIM exchange that are basically microcap companies. And the reason I started looking over there, and this is just in the last 2 years, is they still do small IPOs with real companies over there. Unlike here in the U.S., where the only things that are IPOing as a microcap company is a life science company that's raising 10 million, 5 million, 20 million for a phase 1 study. You actually have real high quality businesses going public as small 50 million market cap companies over in the UK. And the other odd fact about over there, different from here, is you have like BlackRock participating in them
Yeah,
and
that's
Fidelity, and it's just a different world, and it's weird. And what attracted me there is I kind of just stumbled upon a few of them, and I looked, and these are companies that went public 2-3 years ago, and they ended up going up 5x, 10x, 20x. And that kind of excited me about the opportunity in the UK. And it's English speaking, similar accounting rules, and I felt comfortable doing that. So I started looking at those. And then Australia is kind of similar to Canada, where it's historically been a very resource centered market, but now it's kind of turned from resource into technology, and you can find some really interesting companies there. And the nice thing about here in the US is a lot of the companies in Canada and Australia, there's quite a few of those that actually have US symbols. So you can buy them in a brokerage account, a TD Ameritrade, a normal discount brokerage firm. You can actually have access to those markets.
that's so. I mean, a lot of people in crypto are also investing in small startups that are highly liquid, right? And a lot of the education and discussion happens publicly in communities, et cetera. How do you, as an investor, enter into an illiquid position? How long does it take you to build up that first third? I know it depends on volume and your position size, but how do you approach it from a patient standpoint, from a time perspective as well?
Yeah, I mean, some of them are easier to buy than others. Especially if you have a portfolio of $100,000 versus 5 million, that's a big difference. You know, but for example, I put on an initial position in a company not too long ago, and it took me about a month to acquire the shares.
Wow.
Because you're not trying to influence the market either. It's a lot of just putting in a bid and seeing if somebody hits it, and it might not get hit in a day, and then all of a sudden somebody might hit you, and then hit you again, and so you might get that month's worth of stock in 4 of those days, but you had to have a bid out there to get it.
Yeah, no, that's fair. And Ian, you're built on the idea of finding, 100 baggers, potentially 1,000 baggers. How often does a play come across your desk that you'll move on? Like, I'm assuming there's only, potentially a handful a year that you would even consider, but is there, 5 a year, 10 a year, maybe 1 a year? How often do these come around? These lightning in a bottle type ideas?
Well, it kind of goes back to, if I was right all the time, I'd be on an island somewhere and we wouldn't be having this conversation. So I
That's
would
fair.
say it's more like, I would say it's probably closer to 5 a year that I would act on, and out of those 5, you might be just wrong on a couple of them that you maybe bought an initial position on, and the other two you might be right for a period of time and you might make some money on. It might go up, 30, 50%, 100%, 20%, whatever the number is. And that's kind of all it was. And then you have maybe one out of the five that actually ends up being one that is a sustainable winner. And that sustainable winner might mean it might go up, 2 or 3 or 4x over a 3 or 4 year period of time. It might mean that it goes up that quick in a year. But it's a sustainable type of situation, not just kind of flash in the pan, what I described before. So I would say maybe one out of five in a year ends up being something that you're holding on to for a long period of time, like 2, 3, 4 years. And probably a great question for you to ask me, which I'll ask myself, but it's just to kind of prove about this, it's really hard just to buy and hold. Is if you were to ask me, how many of the companies that you owned 5 years ago are you holding today? I consider myself a pretty long-term investor in this space. I'm holding one company out of probably 30 or 40 that I've owned. One, And
Jeez.
so
Yeah, that's
that means that there's a lot of renting in some of these situations, and it doesn't sound sexy, especially in the world of, just buy and hold and forget about it and compound your capital and this or that. That doesn't work down here. So you're going to have turnover. But
yeah,
doesn't mean
no,
you can't
you're
be
right.
successful.
Yeah, and I don't know why I'm thinking about this now, but when we talked about the negative kind of connotation that microcap investing gets, it's kind of at odds with what happens in crypto because there's funds in crypto that, like A16Z, just raised a $500 million fund. There's funds with hundreds of millions of dollars investing in tokens at sub, not even 300 million, but sub 100 million, sub $50 million valuations, and everyone's okay with it. So I think that that's lending some credibility to there is obviously ways to outperform when you're investing very, very early on.
It is, and especially so if you want to think about small emerging market arenas for companies, you have private equity, venture capital, microcap. Those first two areas are obviously private companies. Our area is public, but we're all investing in the same types of things, small emerging growing companies. And yet private equity, venture capital gets all the limelight. They're you have Andreessen, you have all of these ones like you just mentioned, you have all these firms, institutions that are kind of controlling the best deals. So unless you're a part of their inner circle, unless you went to Harvard and hung out at these colleges, unless you have a buddy that worked somewhere, you aren't getting access to the best deals. And yeah, there's some platforms that are trying to make it easier for people like you and me to participate in them, but let's just be honest, we're not getting the best deals. Where it changes is, microcap. The funny thing is those same institutions, those folks that are controlling billions of dollars that are investing in those types of things, it's the opposite actually of microcap. They couldn't invest down here if they wanted to, because for them, having no liquidity is better than illiquidity, because they get to control the deal, they control the terms and things like that. So they can't ever come down into the public realm because they just manage too much capital. It's not worthwhile to them. And that's the beauty of this ecosystem in microcap is here, you as a small astute investor actually have the edge because they can't invest down here. It's like the opposite of that private world, which is kind of unique. And, there's obviously there's risk, just like there's risk, in private equity and venture capital. Obviously, you're not going to be right all the time. It's tough, or else everybody would be doing it, obviously. But I think there's definitely a structural advantage that isn't talked about in microcap.
Yeah, no, I'm with you there, especially on it, especially on the token side as well in crypto, but it's unrelated, which just speaks to the market. And I want to get your thoughts on the economy here. I mean, you're seeing like obviously the economy is, we're in a tough spot here. We have the virus. I don't want to spend too much time on it, but what I am trying to grapple with is you're an investor in small companies, and it feels like small companies, small businesses are the ones getting hit the hardest as money flows to make Bezos, a trillionaire. So how do you think through like the global macro kind of view and how it affects your companies? Or is that not something that, is too important considering these are niche companies that have balance sheets that are targeting a specific niche?
Yeah, I mean, I try not to think too much about it. It doesn't mean I try to be prepared, but I don't overthink it. And so maybe a place where I've evolved a little bit is, I'm mainly looking for four things out of the investments that I'm making into these microcap companies. And it's the first one is a business that can grow through a recession. Maybe it's not a COVID-19 recession because everything's gotten killed, but in general, a business that can still grow through a recessionary period. And just that one statement there that cuts out 95% of companies. The second thing out of the four, a balance sheet that can weather a storm and kind of act with occasional boldness and maybe take advantage of that recessionary time period. So again, that probably takes out, so if we're left with 5%, that probably takes it down to 2. Then third, a stock that can conservatively double in 3 years. So it's at a valuation that it makes sense to purchase those shares. So I may take it from 2 down to 1. And then, like I said before, an organization that's actually run by a leader that you want to invest in, an intelligent fanatic, that might take that 1% down to 0.5%. So of the entire ecosystem of stocks, the situations that you want to be invested in, for me, it's probably 0.5% of that. And then from there, actually then drilling down even further. So the good thing about good thing about me, and a lot of other people listening to this is you're not managing $5 billion. You can choose to be picky and you can wait for the right opportunities. And that's a big, big advantage. And so I'm just really picky. I have a high hurdle rate for what I invest in.
No, I love that laser focus. I mean, it's unrelated, but in crypto, you saw a lot of major funds bid up and get involved in, projects that can and will never deliver at billion-dollar valuations just because they had to allocate capital. So it kind of demonstrates what you're talking about on this side of the pond as well. I guess when you talk about the intelligent fanatics again, I'm kind of interested in how often does management take your advice and how often do you get into arguments with them? Do you care if they take your advice? Like, how do you think through your role in helping drive the companies you invest in?
I don't really view myself as having a role in it. I'm trying to find the ones that are already doing it because that means it comes naturally to them.
That's
I'm
fair.
not looking to drive change myself. It's kind of like when you've run into this because you're investing in microcaps before. It's kind of like the people that complain and moan and yell at the CEO for not buying stock in the open market. Why aren't you buying the stock down here? Why aren't you buying? And then they finally do, and they buy $500 worth. Like that means anything.
Yeah,
So
exactly.
like, what do you want to see as a person or a CEO buy stock because they think it's undervalued because they want to buy it, not because you force them to buy it. And so it's kind of similar but that's granular, but similar situation to what you just described. I'm trying to find these people that are doing it naturally themselves, where it doesn't need me to say, hey, you should be doing it this way.
I'd rather a CEO make another sales call than buy $500 worth of stock.
Yeah, exactly. Yep.
Yeah. So we have a little bit of time left. I'll cap it in an hour. I know you want to keep this great for the listeners. I want to talk about either your best or your worst investment and what you learned. I guess I'll pose the question to you. We could take whichever one you think is more interesting and you're more comfortable talking about. I mean, the bad ones you learn a lot. The good ones you also learn a lot. But
Yeah, I mean, maybe one of the bad ones, and I don't like to. If you haven't caught on yet, I don't really mention any individual public names. I don't like to. It's
no,
last
yeah,
name,
you definitely
yeah.
don't have to.
But one of them, maybe one of the losers, was early on. It was a company I took a major position in back right when I became a full-time private investor. So this was around 2009, and it might have been 2010 by the time I made this investment. But it was a major position. It was about 35% of my portfolio. So that was, very large into a company. It was growing 25% a year, had no debt, had 25% of its market cap in cash. It was trading at 12 times earnings. You can just feel your mouth watering just me describing that if you understand stocks and companies and valuations. But the company made these electronic lottery cards that were being used in different international lottery markets. And I met the management team twice, and they seemed competent. But I never really understood the product really well. It's kind of, you looked at it, you're like, all right, they're selling these things. It sounds great. But, I was drawn to the valuation and the fundamentals, and the stock doubled over the course of 6 months, which was pretty good, because it was trading at 12 times earnings, and it probably stayed at 12 times earnings because it was growing revenues and earnings pretty rapidly. But then all of a sudden, one morning, I woke up at a PR hit that the auditor was not going to sign off on the financials, and they reported $10 million being missing that was skimmed from the books over 2 years,
Oh my
and
God.
the stock was halted immediately. And when it reopened the following, I think it was the next morning or two, it was down 70%. And I sold my entire position and got lucky. I think I only lost about 40% of my money overall because it went up quite a bit before it got cut by 70%. Um, but then the stock got halted again, and over the next few months, it went to zero. And the lesson I learned was not to put great looking fundamentals ahead of understanding the product and how the money flows. Really, one of the questions I ask management is just all right, I buy how does the money flow in your business to
Yeah.
understand. In addition, I don't, and so probably the main takeaway is I don't really invest in anything unless I have a firm belief into the product or service of what they're selling. Whatever it is. And so that was one of the takeaways there. And yeah, so that was probably one of the ones that sticks out to me.
No, that's helpful context. I mean, the other thing is, I mean, it's 2009, 2010, horrible financial crisis. You just cut the cord on your job and you're now a full-time investor, and now you have to deal with this. How did you think about, not being a full-time private microcap investor at that point? I mean, maybe crossed your mind, or did you, I mean, you obviously stuck with it, which I love, but how did you kind of deal with that period yourself?
No, it was definitely hard because you second guess a lot of things. But at that point in time, 2010, I was about to get married, so I didn't have any kids at that point in time, and it was a struggle, But and there's been a couple times over my career as just being a private full time investor that got a little bit shaky, but I never have had a plan B, and you just figure it out. You just grind and grind and grind. Nothing horrifies me more than having a day job.
I love that.
You know,
Yeah, no, I'm the same way. I love that. I love that. And Ian, before you go, I'd love to talk about one of your favorite investments. What went right? You don't have to mention the name, but I'd love to hear kind of story of how you got involved, why you invested more potentially, and how it panned out.
which one I should talk about?
There's over 600 on MicroCapClub, so you
Yeah,
got to
no,
be
I mean,
picky.
trying
No,
to think of
I
one.
know, I
Like,
know.
it should be one more in the present or more in the past. Actually, one of them that's a kind of a fun story was it was back when I was investing in more gold and precious metals, so 2005, 2006. It was a company I stumbled upon at a conference. It was the first conference they ever presented at as a public company, and I got to know the management team quite well. And the stock was an IPO at $1 per share, and they had some land down in Mexico that they wanted to develop into a mine, which sounds outrageous. But there was a management team that did it 5 or 6 times before, meaning put something into production and produce gold. They had a good history with it, and so I just got to know them really well, and I bought a bunch of stock for myself, which was a decent chunk of my net worth at that point in time. Stayed close to the story, and they told people, "Hey, listen, our goal is to get this land down here. We're going to drill out what we believe is um, an amount of gold that we know that we can make a production decision and then build a mill and get into production." I'm like, okay, that usually takes 20 years, by the way. They said we want to do that in 4 or 5. Oh,
Whoa.
and they said, guess what? And when we do, because of the economics of the ground and the ore body, we know that we can be a low cost producer. And what that meant back then was we know that we can produce gold at $200 an ounce. That's our cost. And so we know that we're going to be very profitable. And when we are profitable, we're going to pay out, a third of that's going to go to taxes, a third's going to go to exploration and maintenance, and the other third's going to go to a dividend to shareholders. And again, this was just when they had a piece of land. They're saying this. Fast forward, and everybody said they were liars. Fast forward 4 or 5 years, and they went into production. And the stock ended up going from $1 to about 10 when they hit production about 4 years later. And 2 years after that, they paid $1 per share dividend a year.
That's your cost basis.
Which was the cost basis. Now, the horrifying part of that was I sold out by then. But I remember seeing them continue to. I remember
Yeah.
seeing them continuing to succeed, and you start like counting the money. You're like, wait a minute, if I would have just hold on to my shares, that was like retirement. You know what I mean?
You'd be on that island.
Yeah, exactly. So that's one that was a fun one because it was a fun situation because it involved dividends, mining, a management team that knew what they were doing, but nobody believed them. They bucked the trend of conventional norms, and they're still around today. They did go through a bad spell at one point, but it's one that is kind of near and dear to my heart because everything kind of went against the grain of common sense, and they succeeded.
No, that's an incredible story. Jeez, yeah, you always think about it after the fact, like what it would be worth. I mean, you had a great play though. How long did it take from entry to your exit there?
That was 5 years. So that was 5 years, and I probably averaged a 10 bagger on that.
Wow. Have you? I hate to ask the question, but have you hit the infamous 100 bagger in your career?
No, I haven't. I'm still waiting on that one. I figure when I get that 100 bagger, I'll write a book about it because it'll be a lot of memories of probably going against the grain of conventional thought and everybody screaming at you to sell the whole way.
Yeah, no, that's usually how it is. Well, Ian, this is incredible, man. I love what you've built. I love kind of your focus on finding the best leaders first, the best companies, and I think it's incredible that you built such a engaged community that's over 10 or 12 years old at this point, and then built that into books and a summit and now a fund. I really huge fan.
No, I appreciate you having me on. It's an honor to be on here, and one of the things that you were one of the youngest people to get on MicroCapClub, and one of the things I remember about you, that I still remember about you, is just your intensity in going after everything that you did 110%. It didn't matter if you were 19 years old or 27 or however old you are now. But I'm watching you, and I'm a big fan of what you guys are doing as well. So thanks for having me on.
Appreciate that, Ian. It means a lot. And Ian, let people know where they can find you on Twitter and how they can submit their pitch to MicroCapClub.
Sure. You can find me on Twitter. My handle is my name, Ian Cassel. That's IanCassel on Twitter. And you can find the information about MicroCapClub at MicroCapClub.com.
That's awesome. It'll be linked in the show notes. Everybody listening, you can just scroll down on your phone, check them out, and hopefully, throw your email on there or throw a pitch on there. Ian, this has been incredible, man. Until next time.
Awesome. Thank you. Take care.
Hey, everyone. Thanks for listening to the podcast. If you enjoyed it, please support the show by hitting subscribe on iTunes, writing a review, or sharing this episode on Twitter and LinkedIn. And stay tuned for our next episode out soon.